Hello viewers, now today's strategy, I like to call it the pullback reversion RENKO strategy. Bit of a tongue twister there for you. What does it actually mean? Well, if you've been watching the channel recently, I did a video on mean reversion. You can see that coming up just there. I'll put a link to that at the end of this video. But it's a concept around that. It takes mean reversion / pullback setup and it follows the underlying trend of the market, hence that name. It's been working pretty well, 75-76% win rate. Been testing it and running it, looking pretty decent. It's a great strategy idea, could work well on other markets too, and I'm going to take you through the setup, the rules, and how you could possibly apply it into your trading. So with that, let's get started. Let's first of all jump into the setup. Before I actually get started, I'm not going to explain the concepts of mean reversion in this video and how the Z-scores indicators work. I'm just going to tell you what the rules are and how I'm using it. If you want to learn about that, then I suggest you go and watch that mean reversion video I mentioned in the intro, and a link to that at the end of this video. That will give you a clearer picture of why this sort of stuff works, but for now we're just going to get into the setup. It looks a bit confusing, but it's not once I translate it for you. Lots of parts going on, but let's just run through it very quickly. Now down the bottom we've got, let me just mark that one, 2 Z-score indicators. Now let me just click on them. We've got this one set to, and the input's 10, and the style there, you can see the colors if you want to set them. Those two orange lines, by the way, they're set up 1.65 and minus 1.65 standard deviations, as they are for the Z score above that. That is set to 20. Above that we have a stochastic oscillator, 1053 settings. And then we got a moving average. Remember I mentioned that longer term trend, that's set to 200. Then we've got 2 Bollinger Bands to give us our mean reversion, our pullback standard deviation moves in line with the Z score. We've got one set to 20, 1.5, and the other one set to 20 and 2. And finally we've got the moving average set to 3, 1. And the actual chart, it's a 1 minute, and it's pretty fast set up here. We've got a 2 pip block size, so pretty fast moving. Again, you can play around with the inputs. Now I back tested the 2 and it worked very nicely on there, and that's pretty much all you need to know for the setup. Now in terms of the actual trade, to give you an idea of how to trade this, now let's take an obvious example. So we start with our 2 Z scores. Now if you notice here, they've just dipped below the 1.65 minus standard deviations and have started to move on back up. So that is a warning for us, and around about there on the price action. We're not that excited until our stochastic indicator crosses, well, the percentage K crosses up through the 20 line, which happened there. But we also need this trigger here of the 200 moving average. If we want long trades, we are only long above it and only short trades below. Now what you see is it all triggered very nicely there. The trigger to get in is the percentage K, so we've got in somewhere around here, and we get out when the stochastic moves back down through the 80 line, which as you can see is somewhere around there. So we got stayed in that trade really nicely as well. And the final part, sorry I forgot to mention, is you want the price action as well when these Z scores are moving like they are to be within our Bollinger Band zone as well, which it started to be, to give extra momentum to that push on upwards. It's saying, well, it's felt exhausted moving to the downside within the bands there, those standard deviations, and it's going to flip, trigger back in the other direction. And that is an obvious trade example, and if any of those rules don't match, then you simply don't trade. So let's just recap the settings of the strategy. We've got a 1 minute Renko chart, block size 0.0002 on the euro US dollar, 2 Z score indicators, settings at 10 and 20, the band set at plus minus 1.65 standard deviations. We've got the stochastic indicator set to 1053 with bands 80-20. 2 moving averages, 200 and 3-1. If you can't have an offset in your chart package, then just put that to 4. Bollinger Bands, we've got 2 of them as well, both set at 22 and 21.5. Now let's flip back to our previous example, because we haven't got the whole picture in here yet. Now that was the ideal trade, wasn't it, that we looked at, where it just kept on going up very nicely and then came out conveniently for us as the percentage K fell back through the 80 line. But what happens in this instance here when we have this little pullback? You know, not in all cases. If we go down here to the left, we've got a long trade example just kicking in here around about here, as you can see. All the variables, but it only went for 4 blocks before pulling back down. Now that's why I've got this faster 3-1 indicator in for. Now this success of this strategy also comes down to how you trade manage it. Now I always put the stops below the turning point of those trades there, so we do have quite a tight risk reward. So we are in about here of risk to just over 2.5 blocks worth, and the actual trade moves 3 blocks in our favour. Now this is where the secret to this trade comes in. What we're looking for with that high win rate is this 1-to-1 risk return. That's the sort of ideal world. You can get away with it at 0.8, 0.75, but you've got to be on top of that win rate to make sure. So what I'm saying is, when we get to that 1-to-1 zone, which would have been around here, we can action in different ways. You can take off a big chunk of your profit and let it ride, and then you get taken out, say by the stochastic indicator as it crossed there. You could let it ride. If, for example, you're seeing, the price action above that 80 line, when you've got your, good risk return numbers, you could let it settle until it comes back on down. But if not, what I would do is, like in this instance, a tight trailing stop when you get to that zone that you're comfortable with in terms of risk return, whether that's 0.75, 1-to-1, that sort of area. You pull that stop really tight, and in this instance we might have got out here. So the ideal trade is this nice long-term one, but in reality we probably got out somewhere in here. But our risk being only a few blocks, that's still 1, 2, 3, 4, 5, 6, 7, 7 blocks to 3 risks. So it's a nice 2-for-1 risk trade, just over. And that is what we got to think of in the long term. It's all about managing the probability and odds of the trade, and as long as we got a high win rate and a good risk return in that number range that I talked about, then in the long term the strategy will prove successful. When you're going to have to get used to these light short trades where you might not get your target, but if you got out on that short moving average there, you'd have still made some money out of it. And with the way this strategy works, with the trend filter and the stochastic and the Z scores, there's not so many trades. We're talking maybe 3-4 a day on this strategy. Now when they do come along, they're normally pretty successful. Now let's summarize that rule set. I'm going to start with what I call phase 1, and that's the entry. So for a long trade, Z scores are coming up, both of them through the minus 1.65 standard deviations. The stochastic K has come up through the 20 line. The price is above the 200 moving averages, and the RENKO blocks are in the lower Bollinger Band zone. That means we trade, and the trigger is the stochastic oscillator cross, and that's it. We're in our trade, and note that for short trades it's pretty much the opposite. So to me, phase 2 is the real important part of making this strategy work. It's the trade management side. The secret to the strategy is thinking in terms of long-term averages, performance stats. You can have flat runs of not very exciting, pretty drab P&L, but you've got to be there when the opportunity arises to take advantage of, like that trade we saw, the ideal trade, which does come along quite regularly, but gives you that high risk return play. So in terms of long-term averages, you will average out at that sort of goal that we're looking for at 0.75 1 to 1, and stop loss is always tight on this trade. It's just below the RENKO turning point for the long trade, and vice versa for the short trade. So it's going to sit at those Bollinger Bands, so it's already a deviation move away from the mean, so which is a good place to put your stop anywhere. And our ideal target, like we said, for the trade to get out of is when it crosses back down through the 80, but in reality we're more focused on the risk return in those range numbers, and when we get into our zone we bring the stop tight. We can partially exit and continue to trail up the position until, say, it crosses the moving average, or the stochastic moves back below the 80, or like I said, it might work in our favor from the start and move from one side of the stochastic bands to the other, and we cross out on the dip down below the 80 for the short, and it's all vice versa for the short trade. So that's the rule set up. So just some thoughts for you here. Think of this strategy in terms of long-term average performance stats. Measure everything against what your key targets are to get this strategy to work. Think long-term risk reward win rate. Nardik says that is the key to success. To give you some ideas of the variance in the strategy, you can drop your risk reward down to 0.35 to 1 with a 75% win rate to get small gains. And on the flip side, if the win rate drops to about 65%, you need a risk reward minimum about 0.61 to start making cash. So like I said, critical to be managing your risk reward and win rate around this strategy. Now I've been running it live for a few months and I'm getting that high 70s win rate with a risk reward around 0.8 to 1 at the moment. It seems to be working well on the Euro USD. I'll keep you updated how it goes on. There you go, a great little strategy there on the Euro US dollar. A play of like the mean reversion trend following idea. Sounded complex, but as you've now seen, once you've gone through it, it actually works out quite simply. A nice one for a few trades per day, high risk reward win rate, all looking quite good. Let me know in the comments below what you think of the strategy. Do you run something similar? Love to hear your thoughts, and if you've liked today's video, please give us the thumbs up. Don't forget to hit the subscribe and bell notification buttons to receive future content notifications, warnings about stuff coming your way. Now, if you're into the RENKO, you want to get more into the RENKO, we've got you well covered here at the TheStopHunter. As you can see over my shoulder, a couple of books that are out there, hardback, paperback and digital. RENKO Chart, Trading Revolution and the Samurai Trading Code. We've got live recordings of our recent RENKO masterclass. We've got other tools like a brick block size calculator for you as well, and I'll put links to those all in the description below. So thanks for joining me in this video, hope you've enjoyed it, and I'll see you again soon.